Hello and welcome to Voice of Crypto's Roundup of 2022. I'm Namrata Shukla and this is the final part discussing the crucial events of 2022. Bitcoin's value has been quite wonky this year. In fact, the digital asset has reported losses almost every quarter. So we are trying to play a game with our viewers. Let's try and predict what the Bitcoin price is going to be on 31st January. Yeah, there is a price for all your hard work, but you have to stay tuned to watch this video and play the odds well. So let's do it. This video will cover the fourth quarter of 2022, wherein we saw giants like FTX take a tumble and induce more panic and fear in the market. By the end of December, the ones who were fighting at family events for cryptocurrency were now trying to save face during Christmas. It was clear that this winter was going to be brutal, especially for the ones who were on the sidelines like just the traders. So let's take a look what the final quarter of 2022 had in store for us, beginning with the DeFi hacks. DeFi hacks. Guess Halloween wasn't enough. The crypto hackers decided to trick many and made October the biggest month of the biggest year ever in terms of hacks. Reports from Chainalysis speculated that almost 718 million was stolen from DeFi sites across 11 different hacks. DeFi became the hottest target for hackers this year and accounted for almost 99% of the total losses from July to September. The hacks highlighted by Chainalysis in October had added up to a total value of 2.2 billion, and the rest is history. Now let's move on to the other biggest event of the quarter, the FTX Exchange collapse. 2022 was tough. The last leg of the quarter made it even worse for investors, traders, and everyone involved. With the collapse of Sam Bankman-Fried's FTX Exchange, 2022 could be marked as one of the worst years of the digital asset industry. Once among the biggest cryptocurrency exchanges, FTX collapsed, losing billions worth in funds. The problem for FTX began when Binance's CEO CZ announced that his exchange would sell off FTT tokens, which were FTX's native currency. Zhao's announcement was followed by the news of Alameda Research holding an enormous sum of FTT tokens on its balance sheet. Following Binance's sell-off announcement, panic seeped in the market fairly quick, and FTT's price started to notice a drop. This happened because users were trying to pull out their funds from the exchange that added to the massive liquidity crunch. Binance was considering a potential buyout of the FTX exchange. However, it fell through, forcing FTX to declare bankruptcy, and Sam Bankman-Fried stepped down as the CEO. Soon, on 12th November, FTX filed for Chapter 11 bankruptcy, and if you thought that was bad, it was attacked by some hackers on the very same day. Numerous wallets allegedly belonging to the exchange saw around 640 million in tokens simply vanish. It was later found that these stolen tokens were not only moved to different exchanges but also converted into different cryptocurrencies. While there were rumors of this being an internal job, it wasn't clear who stole these assets. Even the counsel for FTX's new management, James Bromley, stated in the first court hearing that a substantial amount of the exchange's assets are either missing or stolen. Impact of FTX collapse. The fall of the giant caused massive tremors in the market. Bitcoin's value fell to $16,000 for the first time since November 2020. Meanwhile, lending platform BlockFi that had taken a loan of $250 million from FTX also had to report bankruptcy on 28 November. Chainalysis estimates that the FTX collapse has caused the industry to report at least 9 billion in losses. One of the beneficiaries of this collapse was Binance. Binance held a dominant percentage of market share among the top centralized exchanges in the last 3 months of the year, increasing from 48.7% in the first quarter to 66.7% in the last quarter, according to a report by CryptoCompare. The exchange noted a massive increase in its dominance through the year. However, spot trading volumes fell 45.3% to 5.29 trillion. Out of the 11 centralized exchanges accounted for in the Crypto Compare report, only Binance and Bybit noted an increase in the market share in each quarter of 2022. The reason for this was the consolidation in the industry as overall volumes dropped, with exchanges competing for this reduced volumes. Now let's discuss the overall state of the crypto market, beginning with exchanges. Amid a lengthy crypto bear market, trading volumes across centralized exchanges fell 46.2% in 2022. As per the Crypto Compare report, volumes across centralized exchanges remained well above the decentralized exchanges. The industry took hits amid decades-high inflation, leaving investors skeptical of speculative bets like crypto as the Federal Reserve raised interest rates. While the digital assets were reeling from collapse of industry giants like Terra USD, Three Arrows Capital, Celsius, and FTX. Let's discuss crypto adoption. While crypto adoption hit a standstill, Polygon decided to buck the trend. Polygon accrued 200 million addresses despite this challenging year. The network's unique address count recently surpassed 200 million mark and reported an all-time high of 205 million on December 31st. Additionally, over the last month of 2022 alone, an average of 283,000 new Polygon-related addresses came into existence daily. It bears mentioning that the number of transactions taking place within the network has continued to hover around 3 million mark. Now let's discuss the investments going into Web3 and NFT space. The NFT market and the metaverse industry have continued to pique interest of several luxury and fashion brands. For example, in October, Rolex, a popular global watchmaker, filed for multiple NFT related trademarks in addition to one for a cryptocurrency exchange. Popular sporting good giants like Reebok, Nike, and Adidas also continued to make similar moves. Nike launched a metaverse venture called Swoosh, a Web3 enabled platform where customers can buy and sell virtual products. Meanwhile, Adidas released a new line of virtual gear last year along with the assistance tool, allowing avatars from compatible partner collections such as Bored Ape Yacht Club to be dressed up with their gear. Reebok filed numerous trademark applications in the United States for a wide range of virtual apparel, including footwear, headwear, and sports equipment. Luxury car manufacturer BMW announced that it too had decided to enter the metaverse fray by applying for a trademark for its logo that will be used in relation to its upcoming virtual vehicles, digital retail, and other related services. Additionally, Meta has also extended support for NFTs. In November, Instagram's development team announced that it was testing the ability to mint and sell NFTs with a select group of digital creators. The feature will go live on Polygon network, with creators and collectors not having to shell out any gas fees initially. Things are looking up for Web3 and NFT ecosystem as crypto hibernates for now. So 2022 was indeed a year for growth, hacks, and the collapse of many crypto giants. It was a clear example of the bigger they are, the harder they fall. While we watch out for crypto events in this new year, our viewers can sit back, relax, and predict where Bitcoin will end up on 31st of Jan. Leave a comment under the video and stand a chance to win $100 for an accurate prediction.